So guys, Keith Trades. Today is December 9th and a great day. But as you can see the title of the video, a winning trade gone wrong, right? What did we do wrong on this trade? Man, it's execution, man. Finding the winning trades and analyzing is very simple. Executing, that's the hard part. But I'm going to get into my mistake I made today. Again, we did go 2 for 2. It was a green day, but a very small mistake that cost us a lot of gains, and it happens. But we learn and get better. So coming into the day, a very clear short. Right, we had the after hours accumulation. When you see upside manipulation coming into the session open at all-time highs, you're likely looking at a bearish day. When you start to see days where we start to, come into the session manipulating lower, we're looking for the higher prices, right? But as you see today, we came to the session running higher, looking for the short. Again, play point, right? And it came from the higher time frames, the 1 hour fair value gap. I was looking for market to draw into this 1 hour fair value gap off open, find the selling pressure, and look for targets lower. Right, sell side lower. Swing low, right, we had a self open, swing high. We draw our Fibonacci tool here. We traded back in discount of the range. And when we traded into discount of the range, coming on the 1 minute, we left a nice SMT. Right, aggressive selling off open, but we swept out one more time higher and left this SMT. Keep track of the opening high and the 650 high. All right, if we go to ES, what do we see off open? Opening high. Did we sweep out that opening high off the 650? No. Lower high for ES. As you can see, the opening high does not get swept on ES. The 650 candle puts in a lower high. If we go to NQ, we see opening high gets swept, and 650 is a higher high. So now we're looking for a point of entry. We had this bearish here that we could short, but we got in a bit earlier off a 3-minute inversion. Go to 3-minute time frame. Right, we know we want to look short. We know we have the rejection. We know the SMT. Now we're looking for a point of entry. 3-minute inversion here. Candle closure. We got short. I got a 626 entry. Bam. Again, my target for this trade was this sell side point and was these lows and the leave runners. But what had happened was we see a very, very opposite confluence. So when we took our initial scale at 711 here, ES at 711 here, right, we had already cracked the internal low around the higher time frame. Right, we were headed towards these pre-market low. 711, we had already taken out the internal low. If we go to NQ, that internal low lies way down here. So what do? We protected ourselves and took a 20-point scale. In my opinion, that is not an issue, right? ES relative to NQ swept this low already. So we could SMT here and run higher. So I'm fine protecting myself by scaling and getting break even. My rules for execution in bad price action, which as you can see, the market is very slow. My rules is this. Bad PA, stop, stays, break even when it's worth it, right? What do I mean when it's worth it? If we can see here from my entry on a 20-point scale, my fault, we didn't scale there. We scaled down here, my bad. Down here was a scale for 20 points, right? If we look at it, 20-point scale here, the difference is what? 43 to 50 points. So almost double, over double of what is scale break even to full PT. So what does that mean when it's worth it? Let's say our TP was what, 3 points away, then yeah, we could trail stop. But if it's worth it to hold it to 40, 50 points, yes. But what did we do wrong? Once we got our scale, right, my original stop was placed here at 43. I ended up moving my stop down in profit after the scale here to this internal high. And why is that a bad thing? We know the market's slow and choppy. Yes, I have confidence in this delivery lower with bearish ES. Yes, I know we're likely to run this low. We have our bearish model. I'm confident in my profitable trades. So why would I go to break even? Because maybe I just didn't want to see this trade go, break even. But what is it? Bad price action, which we have, stop, stays, break even. PT's worth it? Yes. a 20-point scale. We only scaled because ES took the low and NQ wasn't even near that low. So it's fine to scale there. But my stop should have been stuck at break even. We would have been totally fine. We would have delivered to my PTs. So that is what I mean by a winning trade gone wrong. Execution. Totally fine. Coming tomorrow, what do we do now? Let our runners run. And we have a 20, 40 point difference between profit areas. We hold the plan. We trust in it. And I was so confident. The market absolutely shit down hundreds of points that we missed out on. Am I upset about missing out on? No. Had my setup actually right, it was a winning trade. Just one small mistake, but guess what, guys? The market's there tomorrow. The market is there for the rest of our lives unless something tragic happens in the world. So we have tomorrow, the rest of the week, we have our whole lifetime to get better at execution. And execution is the hardest part. That is what I mean by winning trade gone wrong. Got our setup, everything looked great, just slow action, but we have to detach. Yes, we were in this trade for 20-something minutes. Was my stop loss hit? Was my target hit? No. Early scale, okay, because ES ran this low before NQ. Totally fine to adapt to action. What's not okay is getting scared and wanting to catch my profit, make sure I don't go break even by moving my stop down here. Stick to my rules. It's worth it at a 20 and 30 point difference to hold that to plan. Stop, stays, break even when it's worth it. That's all I have, right? That small mistake is why the title is a winning trade gone wrong. And then we took one more setup in the PM, and it's a very classic setup for us, and we do this trade plenty of times. When we see an aggressive sell-off or we see an aggressive uptrend, when we form an imbalance intraday, that imbalance is likely to get repriced to unless we see aggressive selling through lows, right? What imbalance I'm talking about is this 1 hour fair value gap that we closed. So I know that we've already swept out sell side. So if we see the reversal model come in, we are likely to do what? Reprice to the nearest imbalance. Our time frame, 1 hour. Right? Hopping on PM, didn't see much structure. But what I did see was we had a huge consolidation range. Right? We went to go hunt for buy side, which we did, but we never repriced the 1 hour. So I know if we see the reversal model, we're going to hit that 1 hour, no problem. Right? So lunch hour consolidation. We end up sweeping out sell side, manipulating, and we are still respecting this 5-minute bullish, but that wasn't really a point of confluence for me, in my opinion. I was waiting for what? 5-minute inverse here. I was confident we're priced at the 5, so I did get an early entry, and that came on a 2-minute inversion. So as you can see, here was the 5-minute fair value gap, but the candle closure was up here, which would have been fine in hindsight, but we ended up having a 2-minute fair value gap here. And I was confident that when we inversed it, we're likely to run higher. So got the inverse, got our entry long, TPs. Very simple. Right, consolidation in lunch, swept lower. We inverse the 2-minute, which if you want to stay patient for the structure, we inverse the 5. I did not. Even then, you would be totally fine longing it because you would have got an inverse 5 long close at the 507. So just like a 3-4 point difference in entry, which is totally fine in my opinion. But I was confident, executed, hits nicely, left no runners. Again, another mistake, left no runners. Could have paid a lot more than what we got. But overall, a great day. Stay disciplined, took the right setups, we executed. What we did not execute well is our take profit plan, detaching from the markets, letting go from the price action. But overall, these are my 2 trades. We went 2 for 2. We only focus on 1 trade a day, 1 trade per session max. We executed 2 wins, and that's going to be that. Small little shout out to boy Dom. $927 profit today, and that is a almost $3,000. And this is in a express count, so this is a past account. This is towards his payout. He's already caught 1 payout. This is his 2nd payout. This is beautiful stuff. Shout out to Dom. Our members are winning nicely, but that's going to be it, guys. December 9th, start the week off right. Again, let's focus on execution tomorrow, and I promise that tomorrow's YouTube video, if all goes well, we get a winning trade, we'll execute a lot better. But that's going to be it, December 9th. Thank you guys for watching. Leave a like, leave a comment, subscribe, and we'd love to have new members in Discord, free or paid. I will make sure to help you guys out. Thank you. Peace out.